why not do both? Your business is a great way to make active income. You need to work in it. Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this important how-to, we've got a question from somebody on Instagram. They wanted to know if I should invest in real estate or I should double down in my business. Now that question is from Samuel from Stewart Painters. And to me, it's such an important topic. It's actually, I like to say it's near and dear. And that's what over the last 15 to 20 years has been the struggle in my life. Should I double down in my restaurant business, try to scale that business, or should I take some of the profits and some of the money from that business and invest in real estate? And thankfully for me, I decided, hey, the restaurant was more of a transactional. It was very hard for me to build equity and to really scale that business. I took a lot of the profits there and I put it into real estate. As you're listening to the podcast, if you want to get premium content, I want you to subscribe to the Jake and Gino channel on YouTube. Hit that subscribe button. Every week we release premium content. We do a weekly masterclass with our Jake and Gino community. That's only to the Jake and Gino community. If you want to get access to that, I want you to subscribe to our YouTube channel and you will get access. Now, to really get specific to the question of Samuel, should I put more money into my business? He's got a painting business. Should I really try to scale that? Or should I take some of that money, some of the profits, and diversify and put it into real estate? My answer is, why not do both? I think if you look at most people who are wealthy in this country, they either own businesses, they have a really high paying job, they have a really unique skill set as far as a surgeon, as far as an attorney, as far as an inventor, or they own businesses. Now, I think, to me, the goal of any investor is to get a more favorable tax bracket. That's why someone who's a W-2 employee can earn a ton of money, but they get very little tax relief. Entrepreneurs, business owners, people who create value, people who create jobs get more tax benefits. So what I want you to do as that business owner, you're creating money, you're creating jobs, you're getting income. That's active income. That's earned income. What I want you to think of is I want you to convert that income, save some of it, and put it into the second and the third types of income, which are portfolio and which is passive. Now, portfolio income is stocks, bonds, I guess if you want to call crypto portfolio income, put it into there. That third component, though, is that passive income. And that's what I started to do earlier on, 15 years ago. Nowadays, it's called a side hustle. When I started, it was called another job. And I want to dispel something that people have been talking about over the last 5, 10, 15 years, that life has gotten more expensive and everyone needs a second job. Well, it's been that way for a long time. I think when globalization hit the economy, things started going global, competition started to become fierce. All of a sudden, the internet came about and we can look at pricing, and if things got so competitive, prices and wages dropped. And even for businesses, I wasn't making the amount of money that I was making back in the early 2000s and the 90s when I launched my business. 08, 09, 2010 comes, fierce competition. Things start going and profit margins started to shrink. And that's why I needed to find an alternative to my business. Now, I could have scaled it, but the food industry is so challenging, in my opinion. It's very hard to scale. It's really labor intensive. So for me, I said to myself, I've got this money that I've got saved up. I'm not a big fan of stocks. I'm not a big fan of bonds. I'm not into the stock market. I can't control it. How about real estate? And that's where I started. I started with the fourplex. And then from the fourplex, I started moving into different areas of real estate. Not really good ventures, made a couple of big mistakes. But then when I met Jake, all of a sudden I understood multifamily is the way to go and focus full time. Why real estate? It's a great way to build long-term wealth. Not short-term. It's not going to happen in the short run. It's for long-term wealth. It's got tons of tax advantages. It's a massive wealth builder. And what I like, it's not really correlated to the stock market. And another function of it that I truly love, that people may think I'm a little crazy about, is the fact that it's not liquid. As you may know, and you may be following over the last month and a half to 2 months, Bitcoin and crypto have gone crazy. Bitcoin has surpassed the $100,000 point right now. I mean, it was 40,000 2 months ago. Now, the problem with that, to be able to create long-term wealth, is when you have it at 40,000 and you see it go to 60 or 70,000, you've made 70 or 80% in a month. Your inclination, and it's a good inclination, is to hit the exit button and just to get out, recapture your money, and hopefully wait till it goes back down. But we know the vast majority of investors get caught up in the euphoria and they buy high and they sell low. Now, that's very difficult to do with real estate because it takes a little bit of time. And sometimes you may not be able to sell the asset and you may be forced to hold on to it. And that's a good thing. There is liquidity events through real estate. You can sell a portion of your asset to a potential partner. You can go out, raise capital on that asset and get money from other people. Or you can do a refinance and roll, refinance a property, pull the money out, another tax advantage property because it's typically a loan to yourself. You're not paying taxes on that until you have to recapture it and, recapture that if you sell that asset. Now, if you hold on to it and you have a refi in it, you're not going to pay taxes on that money. You can also do a 1031 once you're able to exit it and you're able to shelter or defer those taxes even longer. So I think that's what I'm trying to get at with this whole lesson right now that I'm talking about. Why not do both? Your business is a great way to make active income. You need to work in it. I mean, not that you don't need to work in real estate, you do as well, but it's such a great hedge against inflation. As prices go up, well, guess what else goes up? Rents. And I'm here to tell you, they're not going to stop printing money. Asset prices are going to continue to inflate. They're going to continue to rise. It's a basic human need on top of that. The demographics are there for multifamily and for commercial real estate as far as rentals go. I'm completely convinced of it. There's a shortage of it, especially in certain markets. So why don't you think about doing both? But here is the big problem with businesses. Did you know that 70% of all businesses never sell? The idea of building a business and building equity and being able to exit that once you're done with your business is the dream of all business owners. But 70% of them fall short. Now, I was fortunate to be able to sell the restaurant a month before COVID. The new owners bought it. They had to stop. They did well. They did fine. They got money from the state. They were able to fix it up and reopen it. But I was fortunate to sell at a price. Unfortunately for us, there was so much intrinsic value in that business that we weren't able to capture. Now, I'm going to give you a homework assignment. You may not like it, and if you're not a big reader, go to the Jake and Gino podcast. Look up John Warrelow. He wrote a book called Built to Sell. If you are running a business right now, read the book, because I want you, if you don't think you're ever going to sell your business, that's fine. At one point, you may be able to want to hand it down to your family. John, in the book, describes how you build and set up systems and processes within your business so that you can extricate yourself out of your business if and when you decide. And it's great because you don't have to do it, but you at least are positioning yourself to be able to do it. Remember, 7 out of 10 businesses don't sell because what you're buying is really the technician. Remember from the E-Myth, Michael Gerber talks about the entrepreneur and the technician. Most businesses, 7 out of 10 of them are technicians. They go into business, they create themselves a job, and they never get out. Those technicians would definitely be more advantageous if they took the money from those businesses and invested in real estate. But remember that. It's important. Now, 80% of a person's capital that run a business should be in the operating business. 20% should go outside your business. That's what the experts say. I think you always need liquidity to stay inside the business. You really need to have those emergency funds to be able to get payroll, to be able to take care of the short-term necessities. But whatever you can, pull some of that money out. And hey, by the way, if you are a painting company, and as Samuel has, he has a painting business, why not buy a mixed-use building where you have a storefront, where you house your business, and you have maybe 3 or 4 rentals, maybe have some garages. That's a great way. For over 20 years, my mother owned the restaurant building. She had the building downstairs. We were paying her $5,000 a month for rent. Every month, $5,000 for 20 years. She paid the mortgage. Whatever was left over went in her pocket. And on top of that, there were 3 rentals upstairs, 3 apartments. So she was generating almost $10,000 a month in rental income on top of the business itself. So it doesn't have to be an and or, it can be an and. Let me invest in my business and let me start in real estate. The only way to start, though, is to truly understand what niche you want to start investing in. If you're a contractor and you're out there, you're building decks, you're flipping homes for other people, why not do it for yourself? Why not find a distressed asset, fix it up, don't sell it, rent it out. And if you don't want to handle the management, find a third-party property manager or find somebody who you can partner with. Do what you love. Do what's awesome on your plate, but find somebody to help you manage that asset. I'd rather, if you do, let's say you do 3 or 4 homes a year, you sell 2 of those homes. You need to pay yourself the bills. Remember, transactions pay the bills. Equity is what's going to make you rich. That 3rd or that 4th home, you hold on to it. You find somebody you can partner with to manage that property. 5 years from now, you're going to be thanking me and saying, I'm so thankful that I didn't sell that home because now I've got a ton of equity in that home, and that home is producing cash flow every single month. And that's what you want. You want to start generating that passive income. I would ultimately say, find somebody to help you do this. Multifamily and real estate. If you're in the contracting business, you know it's a team sport. You can't do everything. Don't think about just focusing on your business alone. That's what I did for so many years. It worked really well until it didn't. Now, if you've got this massive business and you're printing tons of money, you may say to yourself, I don't have time for real estate. I understand that as well. But there's still other avenues that you can invest in real estate, whether they're, the REITs, real estate investment trusts, whether they're syndications, you can become a passive investor, or if you want to go and partner up with other groups that are raising money and going into deals, and you still have some type of ownership and you still have some type of responsibilities. Man, if you are a contractor, I would love, if I was starting out, to have that person on my team to be able to go out, to be able to do due diligence, to be able to look at the property and say, Gino, this is what this is going to cost. You are an invaluable team member to anybody getting into real estate or is already in real estate. So I want to thank Samuel for the question. I hope I've answered the question. I hope you've seen how I became financially free through taking money from my business, investing in real estate. And within 5 years of starting with Jake, I generated enough cash flow and equity from my real estate deals to be able to leave the business and to be able to do something that, in my opinion, is one of the best generators of wealth in this country. Thanks again, Samuel, and I will see you all on next week's How To. Take care, everyone. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.